Chini posted a steady set of earnings in line with expectations. However, gross margins were a bit of a disappointment this time. Vivek Saraogi, the MD of Balrampur Chini Mills, joins us now to talk about that. Mr. Saraogi, good morning and thanks for joining us. This time around, your sugar revenues for the quarter went up by almost 15%, but the margins came off a little bit. What does the outlook look like for FY18 in terms of the sugar business itself?
Good morning to you and all our viewers. See, let me take you through the results annually because that is more meaningful. The quarter accounting for different companies and being a seasonal industry is a little more complicated to understand. So the year is very reflective. So if we see the full year, I'll take you through the segmental numbers. I'm taking it on the pre-tax and pre-interest numbers. The sugar segment recorded a profit of 557 crores, Cogen 157 crores, Distillery 118 crores, making for a total of 831 crores. The interest is 55 crores for the company as a whole for the year, and the other unallocable expense, which is the corporate expense, not a part of costing, is about 41 crores. That gets us to a pre-tax number of 734. Post-taxation, the MAT level, whatever the taxation provision is required, we come to 588 for the year. So this is how I would like to see the result. And, you know, this is the annual breakdown of each segment.
So some of that we already have running as graphics, which we have pulled out from your P&L. Hence our start with, you know, how things are looking, since we've already seen 2 months of the current financial year, and we are very close to the next sugar year also starting. You would have some idea of how the crops are panning out. What is your sense? Do you think this kind of a performance is replicable, or maybe you all will do even better on realizations?
See, we are carrying a closing stock of about 61.5 lakh bags on the 1st of April, and the costing is 3129. We are also looking ahead with optimism, you know, on the basic structure and the construct of the business as we move ahead. In UP and in our area, we are looking at production going up. We are looking at improvement in the ratio of early variety in our company. And we're looking at recoveries also moving north from here. Costing should be under control. And the extra cane availability and the extra crushing should give us more volume for both the distillery and the power segment. So we as Balrampur look forward with optimism as we move ahead. On the current pricing, the price at which we are selling sugar now, it's closer to, you know, 37 rupees.
Okay.
And if we had some production in the month of April also.
Sure. Vivek, good morning. So 37 rupees is the current selling price. How much inventory are you carrying into the next financial year? At what rate? And if you could give some numbers.
Yeah, I just mentioned 61.6 lakh bags at 3129.
No, so in terms of overall numbers, in terms of how much will it add?
I mean the aggregate number.
And the aggregate number for the financial year.
Sorry, I didn't understand.
No, you gave us the
closing stock and this.
No, in terms of, you know, the EPS number, in terms of how much would it add for next financial year?
Add in terms of profitability?
Exactly.
Yes.
See, that's the difference between the cost and the market price.
That's what I'm saying.
So that's 31.29,
right
37 now. So we subtract 31.29 from that.
Yes.
Okay.
Exactly.
Okay.
And
so
that's 2 months around, that's the, you know, I don't know the exact average of 2 months, but it's in this range. And since we've just had 2 months of sale, I can give you data of 2 months, but we look ahead with a very steady sugar market.
Okay. Also, Vivek, is there a basic difference between how the Yogi Adityanath government is approaching the sector compared to the last 2 regimes? Because, you know, that's going to be a fundamental, you know, issue going forward.
Yes, see, we've had interactions as an association and myself also. We see a very pragmatic man. And personally, I think going ahead in UP, the understanding of the grassroots reality with the government will be much, much more. And therefore, alignment to reality, both in terms of policy, pricing, etc., seems to be much better in my mind.
Okay. He has already announced, I mean, the government has already announced 230 rupees as the FRP. And there seems to be a commitment to the Rangarajan formula. Did you get that sense from the ministry? It's very good when you raise cane prices along with the sugar cycle. But are you getting the confidence from your conversation that the reverse will also happen?
See, currently the central government has raised FRP to 255 from 230. UP, however, has an SAP of 305 last year. So we are not very much impacted heavily by this FRP increase being in UP. However, I do, to answer to your second question, I do see alignment with reality. See, next year, let me give an example. This year we had production about 202.3. Our consumption would be 242, etc. Our closing stock would be, adding 5 lakh imports in the region of 4 million, which is enough to go into next year because you have production in October, November also. But which is absolutely, stock in time kind of thing. Nothing excess by, even a single bag in my mind.
Okay.
However, as we go into next year, maybe the production goes to 250. And that is what the consumption looks like. So again, as you look ahead for the next 18 months, you see a very balanced market, not pressured by excess production, not pressured by any uneconomic sugarcane pricing policy. And I did mention about the center's import strategy. That again is a very calibrated and a balanced strategy.
So, therefore, what could the realizations be on the sugar business? I mean, we were talking to, Sakti Sugars a while back, and he did mention that 38 rupees is also a possibility in FY18. From this level, how much of an improvement do you see in realizations in FY18?
See, I'm saying 37 right now. I see it as balanced. I'm not someone who will say it will go to 38, 39.
Okay.
But I'm not saying it's going down. So it's very difficult to predict 2%, 3% in a commodity.
Fair point, sir. Fair point. Thank you very much, Mr. Saraogi.